Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's today about? Today is about trying to game the FOMC decision tomorrow. So I wanted to show you some real eye-opening things that I think make a difference and can really help with things. So what we're going to do in here is we're going to go to prior Fed meetings. And I want to show you what's going on now. And I want to show you the divergences that can make a difference. So on the left is the bond market, the long-term bond on a 4-hour chart. As you see, it's down in the dumps. I mean, just down in the dumps. Now, it's not like I'm trying to be a commentator here. I'm just showing you that. And on the right, I want to show you the SPX that's up here. That's what we call a negative divergence, but I don't need to tell you that. I mean, you see it's a negative divergence. Now, those can go on for a long time. As you see, the bonds have gone down a long time. This has gone up a long time on the right. But into the Fed, a lot of times this gets rectified. So what I thought I'd do is show you some of the prior price activity of the day of the Fed and then like a week later, with bonds versus stocks. So here is the Federal Reserve FOMC meetings. You had January 31st of this year. That's a Wednesday. So we're going to do Wednesday. Then I'm going to show you we're using the rewind function on Thinkorswim. It's called On Demand. We're going to go to the 31st. Then we're going to go to the Friday of that week. Then we're going to go into 2023. And I'm going to go and show you the October, September, July, and December. We're going to do 4 of them. So we're going to do 4 for last year and 1 from this year. So the first thing we're going to do is we're going to go to January 31st of this year. And what you're going to see in here when you use On Demand, and all we're going to do is go to January 31st. That's when it came out. So the first thing you want to see is the long-term bond, what it's been doing. So as you see, the long-term bond on the left was going bonkers. But the S&P was going down. See that? Going down. So it was going bonkers. That was going down. Something's got to give. Either this has to sell off or that has to rally. So what happened? Let's take 2 days later, that Friday, February 2nd. Bless its heart. Yeah, the SPX worked off the positive divergence. It went up, the bonds went down. Net over a week, about the same. SPX a little higher. Bonds a little higher. Fascinating how that works. That's a 4-hour chart. Now we're going to go into the other ones. So the whole idea here is if the SPX sells off while the bond market is still elevated, probably the SPX is going to go up when there's a positive divergence with the bond market. Now we're going to go to the prior ones. So we're going to go into December 13th. When you go into December 13th, that's a Wednesday. Yeah, they're always Wednesday, this FOMC statement. You see the bond market, what it's doing. Look what the stock market did on the right. That's called concurrent mode. When this was going up, this was already going up. No reason for anything to go down. Just keep that in mind in there. So you're watching that. If we go to Friday of that month, to the Friday of the Fed meeting, bonds stayed up, stock market stayed up. Bonds on the left, stock market on the right. Now let's go to one where it really diverged because I don't want this video to be like an hour. So we're going to go into July 26th. So that's one of the Fed meetings. I'm going to go to July 26th because this I think is an eye-opener. As you see, the bond market was going down, the stock market was going straight up. So what happened on that Friday? Bond market went way down. Stock market went down a teeny bit, but not a lot. Now, what's the moral of the story? I want you to see this because I think it's really important. Bond market went down. Stock market didn't care on the right. The momentum was to the upside. at least up to July 28th. But if you go to August 4th, watch what happens. Oh, the bond market started going up and the stock market got slammed. Yeah, there you go. So the whole idea is it just took a week, but then it started working. That's a massive move on the right. That's 122 points. So now go back to Dow. And what you're going to see is the bond market's all the way down here and the stock market's all the way up here. And that's why for my subscribers, I'm telling them the if then. This bond's better hold here tomorrow. If they don't, then I expect the S&P within a week or two to be down here. So have a great night. Talk to you later. Hope you found this enlightening. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.